Welcome back, everybody. Today we're taking a deep dive into something I know a lot of you are really interested in.
Hmm.
Repco Home Finance Ltd's second quarter results for fiscal year 2025.
Yeah.
Um, this is something that a lot of our listeners are thinking about, in terms of potential investment decisions.
Hey, sure.
So, yeah, we want to go beyond just the headlines
Yeah.
and really see what's going on here.
Yeah.
And we've got a few different sources to work with here. We've got the press release announcing the results. We've got the much more detailed financial statements, and we've also got an updated investor presentation.
Mm-hmm.
So let's break this all down.
Yeah, let's cut through the jargon and see if we can uncover the insights that really matter.
Okay, so first off, the top line number that really jumps out at me is that Repco's loan book is at almost Armati Thars.
That's a big number.
What does that actually mean when we put that in context?
So that puts them among the top 10 housing finance companies in India.
What?
So we're talking about, significant market share, a strong player in the field.
Okay, so they're a major player.
Yeah.
And they announced a 15% jump in profits year over year,
Yeah,
reaching ours $1,125 million.
that's right.
And that sounds pretty promising, especially since the previous quarter was a little bit softer.
It is a positive sign for sure.
Yeah.
And I think when you dig into the numbers, you start to see that they've been experiencing consistent growth.
Okay.
Both their loan sanctions and their disbursements are up.
Mhm.
And not just compared to last year, but even compared to the last quarter.
Oh, wow.
So, you're really seeing that upward momentum, which is great.
Yeah, absolutely. But, I think it's important to look beyond just the profit jump.
Right.
I noticed something in the investor presentation that caught my eye.
Okay.
Repco's business is very heavily concentrated in South India,
Uh-huh.
with a whopping 56% of their loan book in Tamil Nadu alone.
Wow.
So that seems like a pretty big bet on one region, right?
Yeah, it definitely raises some interesting questions. On the one hand, this deep regional focus could mean that they have a really strong understanding of that market
Right.
and its borrowers, right? So that could be a strength.
Yeah.
On the other hand, it also exposes them to regional economic ups and downs,
That's true.
right? If the South Indian economy slows down, Repco could feel it more than a company with a broader reach.
Yeah, that's a really good point. And it's always about, balancing the potential rewards with the risks.
Yeah, absolutely.
And that actually brings us to something that every investor worries about,
Mm-hmm.
asset quality.
Right.
What is the story with Repco's loan portfolio?
Well, their gross non-performing asset ratio,
Yeah.
which is basically a measure of how many loans are going bad,
Yeah.
has actually improved slightly to 3.96%.
Okay.
So that's generally a good sign that they're managing risk effectively.
The improved GNPA is definitely encouraging. But,
Yeah.
the investor presentation actually gets into the variations across different loan products
Yeah.
and borrower types.
Yeah.
And some of those numbers seem a little bit higher,
Right.
particularly for loans to non-salaried borrowers.
Yeah.
Does that raise any red flags for you?
I think it's something to be aware of for sure.
Okay.
A higher GNPA in certain segments suggests that they might be taking on more risk in those areas. So, for an investor, it's crucial to understand why those ratios are higher.
Yeah.
Is it due to a specific lending strategy? Are there underlying economic factors at play?
Yeah.
It definitely warrants further investigation.
Okay, so we've got this positive growth trajectory and what seems like pretty decent risk management overall.
So far, so good.
So far, so good. But there's another factor looming that I know you're keeping a close eye on.
Yeah.
Interest rates.
Yeah.
They've been rising.
Yeah.
And that affects the entire financial sector, right?
Sure.
It's not just a general statement for a company like Repco.
Right.
Rising interest rates have very specific implications.
For sure.
So can you sort of walk us through that a little bit?
Yeah, think of it this way. Their cost of borrowing goes up,
Right.
which squeezes their profit margins, right?
Yeah.
So they have to walk this tightrope
Mm.
of managing their own lending rates to remain competitive,
Okay.
but also making sure that they're earning enough to cover those increased borrowing costs.
So it's this delicate balancing act
It is.
that they have to perform.
For sure.
And I know you've spotted some clues in the financials
Yeah.
about how they're trying to manage this.
Yeah. What's really interesting is their borrowing mix.
Okay.
They've significantly increased their reliance on commercial banks,
Okay.
which now make up over 80% of their borrowings.
Wow.
At the same time, their reliance on the National Housing Bank has gone down.
Okay.
So this could be a play to diversify
Hmm.
and potentially get access to slightly lower interest rates.
Okay.
But it also exposes them to different types of risk.
It's a trade-off. like so many things in finance.
Exactly.
But it speaks to the kind of active management that an investor would want to see. Right now, I want to go back to something you mentioned a little bit earlier, which is understanding how Repco assesses risk,
Yeah.
especially with that variation in GMPA across different types of loans.
Right.
And the presentation actually breaks down their loan portfolio a little bit,
It does.
right?
What are we seeing there?
Yeah, so their bread and butter is still home loans,
Okay.
which make up almost 74% of their loan book.
Okay.
And then the remaining 26% is in home equity loans.
Gotcha.
So, home loans generally considered to be lower risk.
Yeah.
So that's reassuring to see.
True, but here's where things get a little interesting.
Okay.
While their overall GMPA for home loans is at 4%, which is an improvement,
Okay.
their GMPA for home equity loans has actually inched up to 4.3%.
Oh, so there's a subtle but important difference there.
Yeah.
It's like they're doing well overall, but there are these pockets of slightly higher risk within the portfolio.
Yeah, you got to pay attention to those details.
And understanding those nuances is key for an investor, right?
Absolutely. And this is where these detailed sources become so valuable.
Yeah.
We're not just seeing the headline figures.
Right.
We're getting a much clearer picture of their financial health and where the potential risks and rewards lie.
That's a great point.
Yeah,
So we've covered a lot of ground already.
we have.
We've seen, the positive growth. We've seen that strategic shift in their borrowing.
Mm-hmm.
And now this deeper look at their asset quality.
Yeah.
What's your overall takeaway so far?
I think Repco seems to be in a fairly solid position.
Okay.
They've got good momentum, a strong capital position.
Okay.
And they seem to be managing their risk, although with some areas to watch closely.
Right.
But, for you as a potential investor, I think the bigger picture is what matters, right?
Absolutely. And we still need to look at, how they stack up against other players in the housing finance sector.
The competitive landscape.
Yeah, exactly.
Yeah.
And we also need to think about the impact of those rising interest rates on their profitability going forward.
Absolutely. But that's a critical piece of the puzzle.
Okay. Let's delve into those next.
Sounds good. So looking at the competitive landscape is always a little tricky, right? Especially when we don't have, direct competitor data.
Right.
But, Repco's investor presentation does offer some comparisons with their own past performance. So that can at least give us some clues.
Okay, so let's see what those comparisons tell us.
Right.
I'm looking at a slide right now titled Key Financial Highlights.
Yeah, that's a good one.
Okay.
And one of the things that jumps out is their net interest margin.
Okay.
Remember, that's the difference between what they earn on loans and what they pay for funds.
Right.
Has dipped a little bit to 5.1%.
Okay.
Compared to 5.4% last year.
So their margin's getting a bit tighter.
It is.
Which makes sense with those rising interest rates we talked about.
Exactly.
But wait a minute, there's another number here.
Yeah.
Return on assets. That's actually gone up to 3.3% from 3.1 last year.
Right.
What's the significance of that?
So that's a good sign.
Okay.
It means that even with a slightly smaller margin, they're becoming more efficient at using their assets to generate profit.
Oh, okay.
So, that's definitely something investors like to see.
So it's not just about the top line numbers.
Right.
It's about how well they're actually using their resources.
Efficiency matters.
Yeah, efficiency matters. Now, the presentation also has a quarter-over-quarter comparison.
Yeah.
So what kind of stands out to you there?
So their net interest margin has actually held steady at 5.1%.
Okay.
Compared to the last quarter,
Hmm?
which is positive.
Okay.
However, their return on equity,
All right.
which is a measure of how well they're using shareholder investments,
Okay.
has dipped slightly
Okay.
from 16.3% to 16%.
Okay, so a slight dip, but still a pretty healthy number overall.
Yeah, I'd say so.
I guess it's all about understanding these trends in the context of, the broader market
For sure.
and the company's strategic decisions.
Yeah. Exactly. And speaking of strategic decisions, remember that shift in their borrowing mix towards commercial banks.
Right.
That plays into this as well.
Yeah, relying more on commercial banks, could make them a bit more sensitive to interest rate fluctuations.
Yeah, it could.
It's like they're making a calculated bet that they can manage those risks while potentially securing lower borrowing costs.
It's a balancing act, for sure.
A balancing act now. Well, we're on the topic of risk. Let's circle back to the composition of their loan portfolio.
Okay.
We talked about how, home loans make up the bulk of their business.
Right, the 74%.
Right. Do we have any more details on the performance of those different loan types?
Yeah, let's see. The presentation does have a breakdown of GNPA ratios
Okay.
by loan product. So what are we seeing there?
Well, the overall GNPA for home loans has actually improved a bit to 4%,
Okay.
which is, a positive sign.
That's encouraging.
Yeah.
It suggests their core lending business is performing well from a risk perspective. But remember, we also saw that their GNPA for home equity loans
Right.
has crept up to 4.3%.
Right. A small difference,
Yeah.
but potentially significant.
Yeah, it could be.
What could explain that?
It's tough to say without more information.
Yeah.
It could be due to the types of borrowers they're targeting for home equity loans.
Right.
Or perhaps there are economic factors specific to that segment.
Okay.
Either way, it's a data point worth watching.
Yeah. I'm also kind of curious about their branch network, too.
Okay.
They've been expanding,
They have.
added 9 branches just last quarter.
Yeah, it looks like they're up to 227 branches now,
Wow.
largely concentrated in South India.
Okay.
But it looks like they are, serious about deepening their penetration in their existing markets,
Right.
while also cautiously venturing beyond that region.
It makes sense they're playing to their strengths while also exploring new avenues for growth.
It's a good strategy.
But, with expansion comes costs. So it'd be interesting to see if they can maintain their profitability.
Yeah, can they keep that momentum going?
Yeah, exactly, as they scale up.
Agreed. It's all about finding that sweet spot.
Yeah.
Now, before we move on, I think there's one more piece of information in these documents that's worth highlighting for you as a potential investor.
Okay.
The shareholding pattern.
You mean like who owns the company?
Exactly.
Okay, and how that ownership is distributed.
Yeah, that's definitely relevant.
Yeah, for sure.
So in Repco's case, the majority of shares are held by the company's promoters,
Okay.
who own a combined 37.1%.
Okay.
So that means the founders and key management
Mm-hmm.
have a significant stake in the company's success,
Okay.
which can be seen as a positive sign
Okay.
of alignment with shareholder interests.
So their interests are aligned with those of other investors.
Right.
What about, the rest of the shareholder base?
So the second largest shareholder group is actually mutual funds,
Okay.
with a 17.5% stake. So this suggests that, institutional investors have confidence in Repco's prospects,
Okay.
which can also be a good indicator for
Yes.
individual investors.
Okay, so that's a reassuring data point.
I think so.
Yeah, it adds another layer of confidence to the
Yeah.
overall picture.
Now, before we get too carried away,
Right.
it's important to remember that all this information
Yeah.
is coming directly from Repco's own reporting.
Right.
So it's like getting one side of the story.
You mean it's important to take this information with a grain of salt
Exactly.
and do further research.
Precisely as an investor, it's crucial to conduct your own due diligence,
Right.
right? Compare Repco's performance with industry benchmarks.
Mm-hmm.
Look at their competitors.
Yeah,
Factor in the broader economic and regulatory environment.
for sure.
So, this deep dive is a great starting point,
Right.
but it's just the beginning of your research journey.
Yeah. Okay, so we've covered a lot of ground here. We've seen Repco's, really strong financial performance, their strategic expansion plans,
Yep.
some potential risks, related to interest rates,
Uh-huh.
and specific segments of their loan portfolio.
Right.
And we even got a glimpse of their ownership structure.
It's all connected.
Yeah, it's all connected.
Yeah.
What's your overall assessment of Repco at this point?
I think based on these sources,
Yeah.
Repco seems to be a well-managed company
Okay.
with a solid track record and a clear growth strategy.
Okay.
They're navigating a challenging interest rate environment,
Right.
and there are, some pockets of risk to consider.
Right.
But overall, I think they seem well-positioned for the future.
Okay. That's a really helpful summary.
Good.
But before we wrap up,
Yeah.
I want to go back to something we touched upon a little bit earlier.
Okay.
The potential impact of the growing demand for affordable housing in India.
Oh, yeah, that's a big one.
Yeah. How do you see that shaping Repco's future? And what should our listener be thinking about in that context?
That's a great question. So the affordable housing segment represents a huge opportunity
Okay.
for housing finance companies like Repco.
Right.
But it also comes with its own set of challenges.
Like what?
Well, think about it.
Okay.
Affordable housing often involves lending to borrowers with lower incomes
Right.
and potentially less robust credit histories.
Yeah, that makes sense.
So, Repco will need to carefully adapt their lending practices
Right.
and risk assessment models
Hmm.
to serve this market effectively
Yeah.
while maintaining their strong asset quality.
So it's a balancing act again.
It is.
Managing risk while tapping into a new market.
Yeah.
With huge potential.
Huge potential. And then you've got the government policies and regulations around affordable housing.
Right. Yeah.
And those can change.
Yeah, for sure.
Which adds another layer of complexity
Yeah.
for Repco to navigate.
It sounds like a really dynamic space.
It is.
And potentially lucrative.
For sure.
But also one that requires, careful consideration of the risks and rewards.
Absolutely.
This is where it gets really interesting for an investor, right?
It does.
Trying to anticipate how a company will adapt and evolve in response to these market forces.
It's all about looking beyond the numbers and understanding the bigger picture.
And that's what we've aimed to do in this deep dive.
That's right.
Well said, and I think we've equipped our listener with a lot of food for thought.
Hopefully.
Now, as we wrap up this deep dive, what's one final thought-provoking question
let me see.
that you'd like to leave our listener with?
I think a crucial question to ponder is this.
Okay.
How might Repco's deep regional focus in South India impact their ability to effectively capitalize on the affordable housing opportunity?
Okay.
Because remember, this segment is likely to see strong growth across all of India.
Right, not just in one region.
Exactly.
So will they need to expand their geographic reach?
That's one possibility.
Even more aggressively to really capture this market.
Or maybe they'll find ways to leverage their existing expertise and relationships in South India to create innovative lending products or partnerships.
Right.
Specifically targeted at the affordable housing segment.
Yeah, there's so many possibilities. And that's what makes investing so fascinating.
It is.
It's not just about crunching numbers.
Right.
It's about understanding how companies respond to these larger trends and opportunities.
The big picture.
Yeah, it really is like a chess game,
Mm-hmm.
trying to anticipate those next moves.
Absolutely.
Well, I think we've given our listener a lot to think about today.
I hope so.
From, Repco's impressive growth and strategic shifts to those potential risks and opportunities on the horizon.
It's a lot to digest.
It's been quite a journey.
It has. And, we've only just scratched the surface here. There's always more to uncover.
Of course.
Especially when you're considering an investment.
Yeah, for sure. But I do think we've given our listener a solid foundation to build on.
I agree.
They've got a better understanding now of Repco's financials.
Yeah.
Their strengths, their challenges, and the factors that could shape their future.
Hopefully we've sparked their curiosity.
Yeah.
To dig even deeper.
Yeah.
To explore those unanswered questions.
Right.
Compare Repco to its competitors and really understand what makes this company tick.
Exactly. Because at the end of the day, informed decisions are the best decisions.
That's what it's all about.
And that's what this deep dive is all about.
Right.
Empowering you, our listener, with the knowledge you need to make those smart choices.
And remember, knowledge is most powerful when it's put into action.
Right.
So take what you've learned today, continue your research, ask those critical questions, and see where your exploration takes you.
Maybe you'll uncover a hidden gem.
You never know.
Maybe you'll decide Repco isn't the right fit for you.
Right. Either way, the journey of discovery is half the fun.
Well said. And on that note, we've reached the end of our deep dive into Repco Home Finance Ltd.
That's a wrap.
We hope you enjoyed the exploration as much as we have.
We did.
Until next time, happy investing.
Yeah.